Hello everyone, welcome to Quantsapp. My name is Dharmendra Rajbhar and today we are going to discuss about ATM and OTM and ITM strike price of the options, okay, and how we can make a trade in those options, what are the differences between those options and how these options can be utilized in strategies, okay, whatever strategies we are using, we will discuss it today, alright. So, let us go to the board and we will discuss what are the options, okay. So, I have already made some arrangements. So, just consider that this is the level of ATM right now, okay. Whatever the current price running at a particular point of time, okay, that will be known as spot price, alright. So, at spot price, what the spot price, whatever the option I am selecting, the spot price, whether it is 25,000, whether it is 25,100 or whether it is 24,000, that particular price will be known as ATM, okay. If we are selecting the option at this, if we are selecting the option of the strike price is same as the spot price, then it will be known as the ATM, that means at the money option, okay. It means if the spot and the strike is same, it will be known as ATM, that means at the money options, okay. So, I have put various strike, okay. So, these are the strike which is above the spot level, okay. The spot price is 25,000 right now, okay. So, the above strike price which is 25,050, then 25,100, then 25,150, then 25,200, alright. So, these all strike which will be achieved in future, and I can say which has not been achieved right now, okay. Right now maybe it is intraday, maybe in the future, okay. So, it will be known as OTM, okay. Then the formula will be derived over here when the strike is greater than spot, okay. Whenever the strike price is greater than the spot price, that strike will be known as OTM, okay. And whatever the options we will buy from that particular strike, it will be known as OTM options, okay. Now, we will go to another strike. So, this strike which is below the ATM level, below the spot price, okay, it will be known as ITM option, okay. So, here whenever the strike is lower than spot, it will be considered as ITM, that means in the money options, okay. So, there are various parameters, okay, and there are various calculation method for calculating the price of these option at the OTM level and the ITM level, okay. We will not go into that, alright. We will just try to understand that how these options perform at the ATM and the OTM levels, okay. So, here we got to know about the call option. I am sorry, I just wrote it down, put option over here, okay. So, these all about call option, okay, these all about call option, alright. I am sorry, I just wrote it down, but here the call option. So, whenever the strike price is above the spot price, it will be known as the OTM call option, and when the strike price is below the spot price, it will be known as the ITM options, okay. Now, let us go to the put option, okay. I will just write it down over here, okay, just a minute, yeah, just a minute, I will just show you. For put it is different. So, here put option, okay. Now, for put option it is exactly opposite the call option, okay. So, for put option, see, in put option we have a perception that we are expecting the market to go down, right. So, that means the price below the spot level is the future price, okay, that is what we are expecting, okay. So, that is why it will be known as the OTM level, because we are expecting this level below the spot price. So, the strike which is lesser than the spot, okay, it will be known as the OTM options for put category, okay. It will be known as the OTM option for put category. So, here when the strike is lesser than spot, it is known as the OTM option in put category, okay. Now here this price has already achieved for the OTM for the put category. Okay, when the strike price is greater than the spot price in put category, it will be known as the ITM option. It will be known as the ITM option. So here the strike will be greater than spot. Okay, hence it will be considered as the ITM options. Okay, now let us discuss what are the differences between these options. Okay, we will discuss mostly OTM and ITM. Okay, but I will tell you everything about all three options. Okay, so if I am considering OTM, ATM and ITM, all right, in ITM. Okay, so according to calculations, okay, various calculation method we use. According to calculations, the OTM price, okay, the OTM, the options which are at OTM, it will be less expensive as compared to these two options. Okay, so that is why the OTM strikes are cheaper. Okay, so most of the traders, they tend to buy more quantities at the OTM level. Okay, so it will be much cheaper. Okay, the ATM will be, I can say it is moderate. Okay, and the ITM will be expensive. ITM will be expensive. Okay, so the OTM strike is cheaper, ATM is moderate, and ITM will be expensive. So when we try to take a trade as a naked position, means naked option position, so most people go with the ATM, okay, or the OTM, because these are reasonable. The ATM levels are reasonable. Let's just say the Nifty at a spot, okay, the Nifty spot, let us say 25,000. So there might be the option price will be like around 150, 130, something like that. Okay, so they tend to buy more, and at the OTM level, the option price like at 100 or maybe below 100. So they tend to buy more quantity. Okay, more quantity in order to earn more money as compared to other options. Here, if they buy huge quantities, that will be much expensive. They have to pay more brokerage. So that is the condition. Okay, that is the issue. That is why they buy more at OTM and ATM. Okay, let me show you data. Okay, so this is the Quantsapp application. I'll go to track. Okay, under option OI, I'll select option chain. Under option chain. Okay, so this is the Wipro. I'll show you about Nifty. Then we'll go to Nifty and Bank Nifty. Then I'll show you how to trade in that. Okay. All right. So it is Nifty. All right. So here you can say the spot right now. Okay, the fair price is around 24,950. See, whenever the spot price is like 24, it is not as at the 00 figure. Okay. So whatever the strike is nearest to that price, it will be considered as a spot price. So it is 24,996. So that is why it is considered at 25,000 will be the spot price. Okay, because this price is the nearest to the fair price. Okay, so you can see these are the call option and these are the put option. So at call option, you can see this is the ATM strike. You can see the price is 147 rupees. Okay, price is 147 rupees, and you can see the ITM level. These are the ITM level. As I said, whenever in call option the strike is lesser than this spot, it will be known as the ITM. So you can see 24,950, 24,900, 24,850, and you can see the price differences between those options. Okay, I'll show you everything about the option Greek also, so that it will make you clear that in which option you should take the trade. Okay, now here you can see 25,000 level. Okay, let me show you through some figures, just a minute. Okay, yeah, so here you can see this is the 25,000 level. Okay, this is the spot. Okay, now for the call option, this will be ITM, and this will be OTM. Okay, so you can see the price are decreasing in OTM levels. Okay, it was 147 at the ATM. 124 at the OTM, and down the line it is decreasing, okay, and here it is increasing at the ITM level. When we go to put option, you can see these are the OTM strike, okay, these are the OTM strike, these are the ITM strike, okay. In ITM you can see the price is increasing, and OTM you can see the price is decreasing, okay. So there are option Greeks, okay, who are working at the multiple levels of the particular underlying asset, okay. So let us check what are the options Greek we should consider while taking the trade. First one is, you can see theta, okay. We will also consider IV, delta, okay. Then we can see here gamma, and we can see the Vega, okay. So most important here we can see the delta in theta, all right. So you can see the delta, okay, the delta at the OTM of the call option, okay, at the OTM of the call option will be like 0.5, near to the 0.5. That means if the Nifty is moving 100 points, it will move 50 points, okay. If you go to the OTM level, you can see the delta is decreasing. You can see at 25 to 50, delta is 0.24. That means if the Nifty has moved to 100 points, it will give you only 24 rupees. It will give you only 25 points. But if you go to the ITM, the delta is higher. You can see here as 24,750, the delta is 0.74. That means if Nifty has moved 100 points, it will give you 74 points. That is why for buying a naked option, like if you are trading in intraday, or maybe like for positional trading, if you are a risk taker, if you are going for the naked option, naked option position, okay. So you can take this, you can take the ITM, okay, because you will get huge return, okay, as compared to OTM, okay. Let's just say in 3 days, or maybe in 2 days, if the Nifty has moved to like 200 points, it will give you 140 points. But other factors are also there which will affect this price. Those factors are theta and IV. If the IV has decreased, then the premium will not increase in that manner, okay, and it will not increase in the greater way, because the IV is low, then the premium will not fluctuate, okay. That is the reason we should check IV before taking the trade, okay. So IV and the theta, okay. Theta is the biggest enemy for option buyer, okay. It will act on the basis of time. So whenever the time is near, that means the expiry is near, theta will be more aggressive, okay, then the time decay will be more, all right. So if let's just say the Nifty is at 25,000, let's just say it hasn't moved, okay, in 1 or 2 days, you can say there will be decrease in the option premium, okay. Same goes for the put also, okay. Let me show you, okay, if Nifty doesn't move, okay. So what if, okay, I'll go to what if, all right. Let's consider the underlying is as 24,996, that means 25,000, okay, and IV doesn't change, okay, IV doesn't change. If I move to like 2 days, okay, just a minute, just see the price at the ATM also and the OTM also, okay. So I'm sorry, the ITM also. Here you can see the price is 229,194. I am talking about 24,850 and 25,000. You can see the price is 229 and here is 136, okay. So let's just say it has moved to 2 days, okay. You can see the price has decreased to 111, okay. If the Nifty hasn't moved from 25,000 range, okay, you can see the price has decreased. So that is why it is important to consider the theta, delta and IV while taking the trade, okay, because these will directly affect the price, directly affect the premium of the options, okay. So that is how the option Greeks affect the options premium, okay. Now, so what we'll do, okay, so instead of buying a naked option, we should go for the strategies, okay. In strategies, we consider all, we consider ITM also, we consider ATM also, we consider OTM also, okay. Let me show you how we consider that, okay. So let's just say I am bullish in Nifty, and I want to take the trade according to bullish parameters, according to bullish sentiments, okay. So what I'll do, I'll go to trading and under strategy builder I'll select option architect. Okay, so I am bullish. Okay, I am bullish. So if I am going to take the trade, take the trade by using inbuilt option strategies, okay, there are various option strategies. You can see short call butterfly, bull call ladder, okay, bull call spread, other there are different strategies. Okay, so let's just say if I am selecting this one, bull call ladder, okay, bull call ladder. So you can see here I have bought one ITM call option, okay, I have sold the ATM call option, and also I have sold the OTM call option. Okay, so in option strategies all the strikes are considered, whether it is ATM, OTM or ITM. Okay, so you understood that all these options are important if you are using the option strategies, because on the basis of these strikes the profit will be calculated. Okay, now let me show you how we can gain the profit. Okay, let's just say right now I am using bull call ladder. Okay, if Nifty has moved at least 300 points, okay, at least 300 points, and in somehow like 3-4 days, okay, now I am here to show you that how option Greeks also affect. Okay, that is why it is important to use the option architect while considering taking the trade. Okay, because it will give you the figure which will include all the factors, that means option Greeks also. Okay, now let us consider the Nifty has moved to 25,300. Okay, Nifty has moved to 25,300. Okay, 25,300. Now in how many days? In 3 days, 2 days or maybe 3 days. Alright, Nifty has moved to 3 days. Okay, it is option Nifty. Yes. Okay, okay, I am here taking bull call ladder. Okay, now here you can see how much losses I can get. Okay, if the Nifty level, just a minute, yeah, if the Nifty is moving to 26,000, so these are the losses I will get. Okay, just a minute, might be I am taking the wrong strategy. Just a minute. Okay, I will just change it. Okay, here bull call ladder. Okay, ratio call spread. All right, I want to take this. Okay, so ratio call spread. Okay, I'm sorry, I just taken the wrong trade. Okay, so now here, okay, you can see I have taken the ratio call ratio back spread. Okay, call ratio back spread, you can see if the Nifty is moving to 25,300. Okay, so these are the profit I can make. You can see. Okay, and these are the losses I can make. Okay, now why I am using the option strategy? Okay, why I am not using the naked option? So let me show you the reason. Okay, let me show you the reason. Just a minute. Yeah. Okay, now if I am going to take the naked position, that means I am buying OTM, ATM and ITM. Okay, now let's just say at the OTM level, when I am buying few lots, okay, let's just say I have paid around 25,000. Okay, at the ATM I have paid around 40,000 and ITM I have paid around 60,000. Okay, so now if I am bullish, my view is bullish. Okay, let's just say the market has moved to different level. Okay, different level, and it is giving me profit somehow. Okay, it will give me profit. Okay, some profit it will give me depending on the strike, depending on the strike of the OTM. Okay, not the ATM and ITM it will definitely give me the profit unless it is expiry. Okay, but at the OTM we have to consider. Okay, because it is not every time at the OTM it will give you profit. Okay, so let's just say Nifty has moved to some level and it is giving me the profit. Okay, so some profit I will book. All right, but what happens if Nifty is moving down? Okay, So these will be the maximum loss. Okay, let's say Nifty is moving down and I'm hoping that it will recover, it will bounce back. Okay, it will bounce back. What happens if doesn't bounce back? Okay, on expiry it is finishes off. Okay, so at expiry these options, okay, let's just say the ITM level was 24,800 and the Nifty has moved below to 24,800. It was 24,750 or 24,700. These all become zero. This all will become zero. Okay, that means my there will be total loss of my capital. Okay, that is why capital protection is very much necessary while taking the trade. Okay, that is why going through the option strategy, because in option strategies my whole capital will not be wiped out. Okay, there will be limited loss. Okay, the loss will be defined. That means the loss will be not more than this price. Okay, that is why I was showing you option architect. Okay, so here you can see let's just say, okay, the Nifty is at 25,000. Okay, now if the Nifty is moving to 25,225, 25,300, these are the profit I am getting. Okay, at higher level I am getting the higher profit. But what about losses? So here you can see at 25,150 I will make 1,300 losses on the expiry. Today if I am taking on the 5th of August, okay, on the 5th of August I will make profit around 1,500. Okay, at 25.75 also I will make profit of 573. But you can see as I am going down, okay, there are losses. Okay, but here you can see the maximum loss. Okay, the maximum loss I am making over here is -2,554. That means I will not make more than this loss. Okay, my losses will be defined that this much loss I can make. Okay, so while considering the option strategy I will consider my risk reward. So my risk over here is -2,554. Okay, this is my risk. And what will be the reward? Okay, now at the expiry -2,554, so I will consider expiry. Okay, if Nifty hasn't moved from 25,000 level. Okay, so this is the loss I will get. Okay, but what about when it is moved to like 25,300? So this is the profit I am getting. Okay, so close to like 1:1 ratio. All right, but if I am expecting there will be greater move in Nifty, okay, there will be greater move in Nifty, let's just say like 500 points from here. So this is the profit I am getting. Okay, at 24,525 I will make around 8,071 rupees. Okay, and 25,600 I will make around 9,946. Okay, so this is the difference. This is the difference between between taking the naked call option and the strategy. Okay, that is why I have shown you that what is the difference between OTM, ATM and ITM. Okay, I have shown you what are the differences between the option Greeks. Okay, at every strike, at the OTM and ITM and OTM, ATM and ITM strike. Okay, that is why it is very much to consider option Greeks while taking the option trading. Okay, so for naked option buying, okay, for naked option buying you have to be very quick. You cannot hold it for a few days because theta will act as much greater way at much greater time at that particular level. Okay, at that particular time you can see if I am holding an option for 3-4 days, theta will act as greater speed. Okay, so there will be decay. Okay, time decay, and my premium will also come down. Okay, that is why I will make huge losses in option buying as a naked option buyer. So if you are an option buyer, always go with the strategy. Okay, the reason behind showing you difference between the ATM, OTM and the ITM is this, that which strategy you should choose. Okay, this is the most important reason behind why showing this session. Okay, so we have learned about what are the differences between ITM and OTM. Okay, I hope you enjoyed this session. All right, please like and share if you like this video. This is Dharmendra Rajbhar. Thank you very much.